Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN Weekly for Saturday, March 14th, 2020. And our top stories this week: investment implications of the coronavirus and market volatility, and gauging investor and long-term retirement planner sentiment. Joining me now to discuss this and a lot more is Dr. David Kelly. He's the Chief Global Strategist for JP Morgan Asset Management. Dr. Kelly, welcome back to the program.
Glad to be here.
All right, let's break it down for the audience because it has been a tumultuous, turbulent, volatile last few weeks. I know there are people out there that are concerned. Give it to us. Break it down for us.
Well, it obviously is a concerning situation, but I think the important thing at a time like this, and this is really why people need good financial advice, is to look at this in a disciplined way. So what you're going to do is you've got to look at, well, what's actually going on with the virus? What's causing the problem here? What does that mean for the economy? What does that ultimately mean for markets? How will we get fiscal response, or what sort of fiscal response will we get? What sort of monetary response will we get? And then finally, what do you do as an investor? So I think the first thing I do is just look at the virus. I mean, the reason this problem is here is because it turns out that this virus it's not the most lethal thing mankind has ever faced by any means, but it is lethal enough and contagious enough to cause a very significant problem. Because right now, the outside of China, and China seems to have contained it. We're not sure about the Chinese data, but they seem to have contained it. But in the rest of the world, this thing is growing at a pace of almost 200% per week. And also the mortality rate is unfortunately running north of 2% outside of China. Now, it may come down over time because we discover that more people are infected, but it looks like it may come down to about 1%. And that's a horribly big number because, of course, if half the country got it, you can do the math yourself. If 1% were to die from it, you can see the problem. And that's true all over the world. And I think what's happening is investors are waking up to the realities of compound math. Once you start looking at these numbers and you just can't catch up conceptually with, okay, well, it was 25 people like a week ago, so how's it 600 people now? And it's that sort of thing that's really freaking markets out, and it's freaking governments out. And what the public health officials are saying is, look, the only way at this stage you can contain it is you're going to have to shut down all sorts of stuff. So you have to social distance. Well, the problem is that we have a social gathering economy. And so if you look at the entertainment business, look at the travel business, you look at live sporting events, you look at eating out of restaurants, all of these things involve gatherings of people. And if we're going to do social distancing, all of these businesses are in trouble. Yeah. And that's really what's going on. And so immediately when you plug this into an economic model, you immediately get the result, well, we may have been fine a quarter ago, but we're going into recession. And so recession is going to start in the second quarter of this year. There is some offsetting effect of huge runs in grocery stores all over the world, frankly, emptying out the shelves, and that'll probably boost second or first quarter consumption. But we go into recession, and there are a lot of companies that are going to be in trouble. I think it's going to really clobber earnings in 2020. And that's really what the essence of the problem is, and that's why markets are freaking out.
Yeah, and not just markets, investors. So Main Street America, people invested in their 401ks, their 403bs, their pension plans, certainly concerned there. Most of these folks who are invested in these retirement plans are long-term investors. So let's. I know we can't project out. There's always that you can't project out what's going to happen in the future. But let's look back, David, and let's look forward because these events have happened over time. We've had epidemics, we've had horrible wars, we've had all these things that happen that impact economies. What can you tell us possibly could happen over the long term?
Well, I think that there are about four things that I'd say people need to remember here. First of all, as you said, people are long-term investors. 2020 is going to go down in history as the year of the virus. It'll probably be a very dark year in the history of the 21st century. And that's true globally. But 2021 will be the year in which we start to recover from the virus. Eventually, we'll have a vaccine. Unfortunately, you can't produce that fast enough to really prevent terrible impacts this year, both economically and medically. But we will have a vaccine. We will have better treatments. We will get a certain herd inoculation in the worst case scenario. And so we will move on. And as the economy moves on, as we get past the effects of the disease, the economy will slowly get back to normal. Now, it'll be a different kind of normal because we will also have an overlay of social distancing behavior, which I think is going to take a long time to go away. Mm-hmm. But even in a social distancing economy, the economy can adapt to that. I mean, there are all sorts of economies out there. And so if we don't shop as much as at retailers, we do more online shopping. If we don't go to as many meetings in person, we do just what you and I are doing right now in terms of Skyping up an interview. Yep. So we will adapt to it. The problem is the dislocation caused by the adaptation. But the first thing investors need to remember is they're long-term investors, and they shouldn't just think about this year, but they should think about next year and the year after. Let me give you one concrete example of that.
Sure.
Suppose you buy a stock and it's 20 times this year's earnings. That's a pretty typical PE ratio. Or sorry, let's call it 16 times this year's earnings. Okay, so the only thing that makes a stock valuable is earnings, period. Well, however those earnings are returned to shareholders, that's all that makes a stock valuable. And what you're saying when you say a stock is 16 times this year's earnings, what you're really saying is that this year's earnings account for 1/16 of the value of the stock. The other 15/16ths do depend upon earnings, just not this year's earnings. They depend on earnings in 2021 and 22 and for years and decades into the future. So if you believe that this is going to be a very bad year, but that we shall recover, then as a long-term investor, you should recognize opportunities when you see it. And if stocks fall too low, then that is an opportunity, and less reason to be scared, more reason to try to take advantage of it.
Yeah, so, absolutely. I'm sorry, go ahead, David.
No, so I think that's one thing that people need to think about. The second thing is this is a reminder about why you need to be balanced in the first place. I remember talking to a lot of people about why do you have to have fixed income in a portfolio in the last few years? Well, the reason is exactly this, that if you run into one of these problems, then a fall in long-term interest rates will cause your bonds to go up, and that insulates you somewhat. A third thing that I think people need to recognize is that the market is rebalancing them. A lot of people, when this sort of thing happens and the market is way down, they say, oh, I better sell out my stocks and I better buy some bonds. But if you were 60-40 at the start of the year between stocks and bonds, you've had a more or less normal asset allocation. Everybody's different and everybody should be different. But if you had a 60-40 allocation, but by the end of business, on Thursday, you're probably looking at maybe your 52% stocks, 48% bonds. So you're already rebalancing. The portfolio is automatically de-risking. And so you need to recognize that. And then finally, I think people need to think about winners and losers in the long run. There are areas of the market which are too expensive going in, and they've got clobbered. And there were things that were somewhat cheaper going in, and they haven't done as badly. And in the economy going forward, you've got to look long term, still think about, okay, if we can pause to catch a breath here, what actually still looks valuable here? And there are still opportunities both in the United States but around the world, particularly in those industries that are well capitalized enough to weather the storm and are well positioned enough to thrive in the rebound.
Yeah. Well, Dr. Kelly, thanks so much for joining us. And again, it's just to remind listeners and viewers that it is the long term that ultimately matters to everyone. So thanks so much for joining us. And we'll look forward to having you back for future updates on what's happening in these crazy, tumultuous times. Thanks for joining us this morning.
Anytime, Jeff. Take care.
And when we come back, we'll talk about higher call volumes and what investors are saying on those phone calls. So stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Well, joining me now is Heather Lavalle. She is the president of Voya Financial's tax-exempt market. Heather, thanks so much for making time for us this morning.
Thanks so much for having me, Jeff. Appreciate it.
Yeah, so we heard in segment 1 from David Kelly from JP Morgan, kind of setting things up economically, financially, lots of tumult in the market, lots of market turbulence as we've been all seeing. I want to get the sense for what you're hearing from participants in these retirement plans who are calling the call center.
Sure, absolutely, Jeff. So, we are certainly seeing an uptick in calls. We have a lot of folks who are concerned about the market volatility, and one of our big focuses is really reminding people that as they're saving for retirement, it should be about thinking about the long term, and now is not the time to be making quick movements with their retirement portfolio. So our focus is very much on calming them, providing the right education, whether they're coming in through our call center, coming in through our digital or participant experience, or even sitting down with somebody one-on-one.
Yeah, and I have to imagine that a little of this is psychological, right? And I'm not saying that the call center reps are trying to be psychotherapists. That's not what I'm intimating here. But this is an emotional time for many people. You've got the health issue, which is a big priority for people. And then you've got this financial issue, which is a subset of that. I mean, so a lot of it is coaxing people and just kind of reassuring them, I would think.
Yeah, you're absolutely right. And I will tell you, I think that, during these times when people are already a little bit more heightened from an emotional state, our call center reps are really doing a fantastic job to be able to calm people down, answer, really looking for prompt resolution of a call, but at the same time, taking the time to answer the questions that they may have. So, absolutely, there is a heightened sense of emotion. We see our call volumes as we're tracking them throughout the day. They tend to kind of be a peak and a trough depending on what's going on with the market. And so again, it's really about calming people down and the reminder of staying the course.
Yeah, absolutely. And I know, I can see that you are in your office of Voya, obviously open for business, and you have people all across the country, I would imagine. You've got contingency plans. The big thing now is the social distancing. So the sporting events have been shut down, but it seems like you are well staffed and ready to go.
Yeah, we are, absolutely. So a couple things, we do business continuity very, very well. We actually have a pandemic crisis plan that we put in place in January. So, we have had very, very robust continuity plans in place. As you mentioned, we have multiple service centers across the U.S. And so a couple things that we have done is we put those plans in practice. We put down travel restrictions for our own employees to not travel internationally for business. We've also limited some domestic travel, but not all. We're really trying to be respectful to our clients and our intermediary partners who want us to be there face to face. But at the same time, we have done some staffing up of our call center, and we have the ability for all of our employees to work virtually. And one of the things that's also really important from business continuity is we've invested really heavily in our infrastructure over the past couple of years, whether it be in our digital platforms, our data centers, and our infrastructure. And we're seeing our web traffic up 44% right now in the last 2 weeks. And so the great news is that our systems are really holding up very well and doing exactly what our investment intended, which is to drive scalability, to be able to have security and just stability of the platform. And our system is responding very, very well to this increased volume at this time.
Yeah, and I'm sure that it's very taxing. People work from home. We've been reading about the bandwidth and potential bandwidth issues that could potentially strain the internet. And obviously that's something that people are talking about. Before I let you go, we talked about the participant and the call center. What are you hearing from your client partners? And even though you are the head of the tax-exempt market, you have corporate clients, you have governmental clients, you have not-for-profit clients, you have clients all across the sectors of the economy. I got to think that there are some themes that you can take away from the conversations.
Yeah, absolutely. Yeah, and you're right. I mean, you've got all clients of every single industry that are really responding to this in their own way. And you think about some of those different groups that you just mentioned. I look within the tax-exempt markets. We have governmental clients that many of which are having to respond to the crisis within their local communities. We're serving a lot of healthcare entities that, again, they're having to respond with just how they're providing care in this new environment. And then they look at education sector, many of which we know are really delaying, kind of close their school or close universities. So the first piece is understanding that they have some of their own issues that they're dealing with, same thing for corporations and how they're responding to the work environment. But really what we're hearing things around making sure we are providing real-time education to participants. And the big thing is making sure that we are servicing their plan sponsor, their participants, their needs, whether it's coming into the call center, making sure our web is up 24/7, and making sure we're properly processing distributions as needed. So that's our key piece, is being kind of that steady oar in the water and supporting our plan sponsor partners and providing the education that their clients needs. And one other thing I'll mention real quickly, Jeff, is last fall we launched something called Voya Learns. And it's an online learning. It's somewhat similar to Peloton, if you're familiar with that kind of virtual workout program. We can provide online learning in a virtual environment, so it's actually live and can answer questions real time. But they're also recorded so that people can go in and watch some pre-recorded education. And we are really beefing up that capability, just kind of given the current restrictions around traveling and, as you mentioned, the social distancing.
Yeah, and I think you hit on some really interesting points. Is that we talked about the call center volume, but you're doing a lot of things. You're doing financial education. You're providing online and web tools for people, for plan sponsors, for employers. You're doing transaction processing. So a lot of people who are watching probably don't recognize that when you send a distribution form in, it may go in electronically, but someone on the other end has to look at it, review it, check it against plan provisions, actually type it in and process it. I mean, some of it's automated, right? But there are people behind the scenes. My point is there are people behind the scenes that have to do some of the work.
That's absolutely right. And so we've had really good protocols in place that will allow us to be able to operate, very much seamlessly, even if we have to move to a virtual work environment. And you're seeing right now, yes, I'm in my office. We right now have given the people the option to be able to work remotely, but we don't feel like we have any type of disruption. We can either work within our offices or virtually to best serve our clients' needs.
Well, Heather, thanks so much for joining us this morning. We'll let you get back to it, and we appreciate you coming on and just giving us a little update and sharing what's happening at Voya Financial with our audience. Have a great rest of the day and a great weekend. And that wraps up this episode of BRN Weekly. But you know what? We're not done for the week, because members of academia, the media, and financial services are all coming together to discuss all the issues related to retirement markets, technology, personal finance, and so much more on the BRN Sunday podcast. You're not going to want to miss this show. And then, of course, we're back again Monday morning with BRN AM. So until then, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.